After a while, we're getting in Feroze Azeez, Joint CEO, Anand Rathi Wealth. Johnson's right now on the show. Feroze, it's been a while. Thank you so much for joining in. We'll take your views on a lot of things, including the data that came in as well. But we're on this big story, Feroze. I would love, if you have a view here, I would love to get your view. The Defense Secretary spoke to us earlier in the day and spoke about moving on from, from a nomination basis to a bidding process for large defense contracts. And we presume that is one reason why the shipbuilding companies are down today, because from necessarily getting orders, now they have to bid for them and compete with the private sector. What would this mean for the private sector defense companies, right? Because I think the L&Ts of the world, etc., now get a fair chance or a fat chance at trying to bid for some of these companies and bag these long gestation orders.
Thank you. It's always nice to be on your show, 𝐀𝐽𝐥𝐸 bhai. And like you said, the probability of an order slipping out is reasonably high when you have to bid for it. There's some kind of protection which was there. I think that's a good move from a sector standpoint. I think the evolution of the sector is very, very critical because there has been very low free float. It's not a mainstream sector. If defense has to become a mainstream sector, then I think we need some degree of evolution in this sector, and that's a great step. Second, I personally think that this can definitely bring in profitability to several businesses, like you mentioned, a couple of them. I would say that this is a very good move, point one. Point two, I've always been saying defense is a sector which you have to momentarily be in, because the exits are very critical. See, now, if you look at banking and financial services, if you look at Nifty Bank, the free float is 86%. IT is 46%. If you look at defense, from a weighted average standpoint, the free float is somewhere around 32 to 33%. So if that sector has to become mainstream, which it needs to, I think these kind of steps will definitely structurally change and bring it to its correct potential, and benefit of to the capital markets would be immense.
Feroze, hi. Tamanna here, and great to have you on India Market Close today and get your views on all of the sectors that we're talking about. I'm wondering if you're looking favorably at what's happening in autos right now, or are you seeing this rare earth crisis coupled with the kind of numbers we've seen in passenger vehicles as a warning sign? The other flip side to it, the positive argument could be that, you have a decent monsoon set for an above normal monsoon, and you're going to see rural consumption boost.
Yes, if you look at auto, I look at any sector a little more relative. So if the sector has to be bought, it needs to have the potential of beating Nifty by 5%. Because all you do revolves or orbits around Nifty, in my opinion, for a long-term investor. Of course, for a trader, the game is different. Now, if you look at Nifty Auto, it has about 15 stocks. The weight of Nifty Nifty has only 6.9%. Of stocks weighted in Nifty Auto. That's the intersection I'm speaking about. So the point I'm trying to get to is the last year results have been minus 2.6% now that the full year results have come through. So if you look at what kind of results this year we will have on a lower base, I'm reasonably positive that you can grow. The Nifty Auto earnings can grow a little more, almost about 3-4% more than Nifty. So 1 year outperformance of 3 to 4% of Nifty Auto is very likely. But I don't see that as a sector which I would bet for a 3-year perspective.
Feroze bhai, did the monthly numbers kind of, were they a bit disappointing? Because, I mean, I think of it, SIP numbers stay strong at 26, 27,000, 4,000 odd crores of NFO money coming in. And yet the lump sums showed a decline, in the overall absolute equity inflow number wasn't the most positive. Granted, there were events like Operation Sindoor, etc. But did it disappoint you, or did you kind of expect this? And are there any implications of this going ahead?
Great, 𝐀𝐽𝐸𝐸 bhai. If you ask me, I look at 3 ratios consistently so that you don't get too over-optimistic. If you're a reasonable distributor of mutual fund, it is but likely that you will always see the silver lining on the dark cloud than the dark cloud. So I keep a static ratio of 2-3 ratios. Very important ratio is to try and see whether the SIP number has to be lesser than the total net flow. If 26,688 crores came in the form of SIP, but you got 19,013 crores in the active managed funds, that implies that SIP jitna paisa aaya tha, there was about 7,000-8,000 crores of lump sum exits, which is a very negative sign. That's point one. Point two is I would see what is my net sale as a percentage of my AUM. Even if you look at the category 3 as categorized by AMFI, there is an AUM of 32 lakh crores and I have brought in 19,000 crores. That implies a 0.6% collection on the base of 32 lakh crores. I would at least expect 1% of net sale as a percentage of AUM. If the industry has to grow at 20-25%, that means आपको 1% तो लाना पड़ेगा हर महीने. Then you get 12 from there. Market movement gives you 10-12. That's when this industry, which is projecting a 20-30% growth, is possible. So both these numbers were not good. Third implication, HNIs have got it wrong again. HNIs have been very cost sensitive, gone into directs, and they have actually been very negative during every fall. I think retail is becoming more pragmatic, more sensible. HNI is becoming, on the other hand, worse off in terms of their action. Every year, every month you see where the markets are down and they've averaged at a lower level of Nifty, you will see lesser sale, lesser purchase and more of sale. But there's one paradigm shift which I'm seeing, which gets validated with the last month number, is that the Indian lower strata has started seeing it as a saving instrument rather than an investing instrument. That change, people are now no more worried about 3 महीने में मेरी SIP की value क्या हुई. That shift, like for a chit fund, for gold, for FDs, they don't track their savings. They've moved from investment mindset to saving mindset is the hypothesis, which I've been testing for the last 6 months. Probably on another day, I'll tell you what research throws up.
Okay, Feroze, thank you so much for coming in and speaking with us. Feroze Azeez there, Joint CEO, Anand Rathi.